All right, what is going on, Discord and YouTube family? And welcome back to another edition of Top Down Analysis with me, T Hobbs. Today is September 21st, 2025, year of our Lord. Sorry, I had to look back to see what day it is. Sunday, September 21st, 2025, year of our Lord. And as per usual, we'll be breaking down the S&P 500, the NASDAQ, the E-mini Dow futures from the monthly candle all the way down to the 4-hour candle. Thank you guys so much for tapping in. If you're listening into YouTube land, please make sure you tip the barber, aka hit the like and subscribe button. Before we go on any further, I also would like to say that the Discord link is in the description down below. It is $40 a month if you guys want to understand how I chart, how I trade. You want to follow my journey. It's $40 a month, but the prices will be going up in January. Now that we got that out of the way, let's jump right into the information. So as of last week on the S&P 500, we talked about, a rug pull, right? If you look at my previous video, I said, hey, we should get a rug pull on September 17th. But if you dug deeper into that video, you understood that, yeah, I'm calling for a rug pull, but by no means am I actually bearish, right? I thought that on the 17th of September, we get a nice pullback, healthy pullback, and then rally. That's exactly what we got. It was damn near to the T of what we talked about that week. And then we ended up rallying above all-time highs. So if we're looking just at the monthly structure, right, we see that on the monthly, 9 days left in the month, we put in a higher low and we made a higher high. That's basically all you want to see to give the nod to the bulls. Nothing has changed, no matter how much I want to be bearish, no matter how much I'm seeing in other areas of the market that's making me turn bearish. Right now, the structure is continuously telling me that buyers are in full control of this market. Let's drop down to the weekly time frame. Again, to further that thesis on the weekly time frame, you can clearly see again higher lows and higher highs being placed on the S&P 500. This is a sign of strength. This is not a sign of weakness. And like I said before, last week we consolidated from the 11th of August, right, all the way into the September 2nd. What we like to see in consolidation, if it's going to be bullish, we see the power of three right in front of our face, right? We see the consolidation or the accumulation. And then we got multiple manipulation candles to the downside. One here that's I'm hovering above on the 18th. And then again on the 2nd of September. What you want to see after that is the expansion. From that level, we got the expansion, leaving behind no wick here, which I think the market will come back for this, but not right now. And then we're continuing that expansion here on the previous week's journey. As long as this continues to happen, there's no reason, in my opinion, to be looking for shorts, right? Other than small scalps back into the daily structure, which we'll go over right now. We go over to the daily time frame and we can see that the trend is very much intact. If I was to put the 200 EMA on, which we'll go ahead and drop that over here, you can see that we're riding this 200 EMA and we're starting to pull away from the 200 EMA. After the strong manipulation on, you guessed it, September the 17th, we came right back down to the 200 EMA. We held this demand zone on the daily time frame, which is exactly what we talked about in my previous video. I said we would come down, and if we were bullish, we would stay at this level, dig into this area here, and then find more buyers for expansion. This also happened to be the 200 EMA, which indicated a strong uptrend continuing, right? So we accomplished all of that. And again, the thought process doesn't change going into this week. And I'll break that down when we get down to the 4-hour. But as we look at the daily candles, we can clearly see that the market gave us a little bit of a scare here. Sellers came in. But again, like I stated that in the previous video, even though we got a bunch of selling coming in, we still held these buyers intact. The market came back into these buyers, held into this area, came back in about 50% on the dot, and then immediately found more buyers to close the day and closing right above the high from the previous day. So if that's the case, you usually see whatever we did on Friday, right, usually is the continuation on Monday, right? So I'm anticipating more upside, maybe a pullback into some of these levels of the daily candle, but more upside coming up on Monday. Let's drop down to the 4-hour and I'll bring over my levels on the top down analysis and I'll give you my entire breakdown on where I'm anticipating price going for the week. We look at the previous day high at 67.3150 on the ES, previous day low is 66.8725, and the 50% or daily fib at 67.0950. That's essentially our dealing range as well. as we have a chessboard high and a chessboard low that indicate those two levels. To the upside, we do not have any price action above. So all of these levels are based on data, right? Our data tells us that the ADR for the S&P 500 is 0.75%, or the average daily range is 0.75%. So I essentially just drew this from the chessboard low and or the daily fib, because I don't anticipate price dropping too much further than that. And that sits us at about 67.4975 to roughly about 67.68. If that's the case, we can use the ADR as simply at a supply zone that is there, just hasn't been created yet. So I want you to keep that in mind as I talk about the levels that we're going for. To the bullish side, if I want to see the market go up higher, we're looking at about 2.24% to the upside. Usually you want to see the market trade down first. So if we trade down, there's a couple levels that I see, but this one most particularly down on the 1 hour time frame, there is a 1 hour fair value gap. That level sits between 66.80 and roughly about 66.69. I want to see the market trade back into this level and then travel up 2.24% into 68.29 by the week's end. Secondary level is the chessboard low, essentially this green box right here at 67 or 6,700, essentially like flat. 6,700 through roughly about the previous day low, which is 66.8725. We trade down to this level, we hold this consolidation here, and then we travel back up to the upside about 2.23%, targeting 68.4925. And you can see 3 months ago, we placed these levels and we said, hey, if we're going to go up, this is the 3-month target, 68.12 through 68.51. And if we get there this week, the 3-month candle closes in about 10 days total. So the week's end, or the 3-month candle should end the following week, which will put us right at this target right here, which will be pretty spot on for the 3-month candle. Again, all based off data. All right. To the bearish side, if I'm incorrect on the bullish side, I'm still going to be correct because I'm going to trade the direct direction. If we're going to go bearish, I want to see us trade up first into this ADR. We fell at this ADR from 67.50 through about 67.68 on a Tuesday. Then I'm looking for the market to start to trend downward on Wednesday, targeting 2.21% from the ADR at 67.70, looking for about a low of 66.19 and retesting the CE of this candle here from the 17th. If we trade up even further, we'll still be coming from the ADR, but I'm looking at about 67.49, i.e. the face of the ADR, coming all the way back down 2.2%, sweeping the low that brought the high, indicating a new uptrend is going to be forming from this level if we immediately find buyers. That level sits at 6,600.75. I don't really like that plan because, to be honest, like I don't really see the market coming back into the 6,600s and strolling there. But at the same time, I'm just basing it off the levels and the data. All right, that's it for the S&P 500. Let's move over to the NASDAQ. Moving over to the NASDAQ on the monthly time frame, you can see again on the monthly time frame, if you didn't believe ES was bullish enough, then you should definitely believe that NASDAQ is very bullish because there's literally no sellers at the high, right? The NASDAQ finished at the absolute high point, which tells me that they're going to be buyers up at this level as soon as we open on Sunday, right? I'm anticipating maybe a gap up or maybe a quick push down and then pulling right back up into the month or into the next month or the next week's candle. The monthly time frame, however, just analyzing it as a candlestick, higher low, higher high, aggressive pullback into the CE, very healthy pullback as long as we didn't break these lows, which we did not do. We held the CE of the previous month's candle of August and then rallied above it. This is a very, very bullish sign. And honestly, like I don't really see them stopping, to close the monthly candle with 9 days left in the candle. We come down to the weekly time frame, however, and we look and see the same thing. We trade back into less than 50% of the previous week's candle. The lower we go, or the lower we go into the previous week, my thesis is that we have to dig deeper to find more buyers. The higher we go into the previous week's candle, meaning we don't have to go that far into the previous week to find that amount of buyers that can bring us higher. The market's barely pulling into 30% of the previous month's candle. Right? If you just take this fib and you just say, okay, what is 30% of the previous month's candle, right? You can see right at the top is exactly where we drop, right? Where we pop from. We're barely pulling into 30% and we're finding buyers. That is a very bullish trend, and it's one that's going to be very difficult to short. So if you've been finding yourself getting smoked on the shorts, maybe don't. Right. So we go to the daily time frame again. We'll turn on that 200 EMA time frame just to give you an idea of how strong this daily trend is. We're holding the 200 EMA, and then we're trading back into it. You guessed it, on the September 17th date, the exact date that I told you guys about 2 weeks ago, based off quant data. Right. From that level, we're bouncing up, we're making higher highs, and then we're making higher lows from that level. We're bouncing above that level and then making higher lows from that level. Again, barely tapping into 30% or even 50% of the previous day's candle. The daily candle is following the same structure as the weekly candle because we're in a very strong uptrend. Do I think it will end soon? Abso-freaking-lutely. Abso-freaking-lutely. But am I going to predict the exact date? No. I'm just going to keep buying it until I see the signs that it's going to turn around. But essentially, we have a higher low here and a higher high here. No wick at the top of this candle. So this indicates that the bulls are in very much control of this uptrend. So it's 200. Turn the 200 EMA off. Let's drop down to the 4-hour time frame. Now let's bring out our levels on the week for the top-down analysis as to how I'm viewing price action this week. I'll turn off this little indicator here because it's kind of overlapping the information. All right. So levels to watch for this week, or the current range that we're in: previous day high 24,888, daily fib 24,771, previous day low 24,655, which is an indication of our entire dealing range on that day. Our ADR above us sits between 25,005 and 25,064, which represents a 0.98% movement from the checkmate low and the 1-hour support. Beneath us, we have a 90-minute fair value gap, our weekly fib at 24,565, and then we have our 4-hour CE that's very similar to the S&P 500. So if I want to be a bull in this price action, obviously I want to see the market trade down first into this 1-hour support. Now I'm anticipating the 1-hour support being tapped here because it's very close to the previous day low. Sweeping the previous day low and then pulling up would be a very good area to get long. 24,694 is the top of the previous day, or the 1-hour support. I'd be looking for 2.72% on the week, targeting 25,361, also putting us right into our 3-month target. 2.71% back from the chessboard low, which is this gray box here, bouncing off 24,775 or 755, targeting 25,425.50 back to the upside, and again targeting that 3-month target that we had 3 months ago, right? So if that's going to be the case, then obviously we're bullish, right? And based off everything you've heard me say from the monthly, weekly, and daily candles, I really don't see a reason for us not to target this. But if we are going to fail, right, our ADR would be our first level of rejection to continue to the upside or continue back to the downside. I want to see us trade up into the ADR, targeting 2.68% back down to 24,397, tapping back into the 4-hour CE. And then from the ADR front, or the 25,008 level, then I'd be looking for, again, 2.69%, targeting 24,337, again, locating the CE of this 4-hour candle here. And this also sits weekly settlement in this area, things to note about this area. So very, very important area. If we can come back here structurally, it makes sense for this low to bring a new high and then come back down and revisit that low, just like we've been doing every single time we make a new high. All right. So those are my levels on the NQ. Let's switch over to the Dow Jones. Moving over to the Dow Jones, again, looking at the monthly time frame, the Dow Jones finally accomplished the goal, right? I can finally turn the B adjustment off, right? It's official. With B adjustment on, with B adjustment off, we've officially gotten above all of the all-time highs. So for me, I prefer to trade with B adjustment off. But since I've already done my charting with B adjustment on, I'm just going to leave it, right? Ultimately, you can trade however you want to trade, but just make sure you keep everything consistent, right? But we finally took out these equal highs right here. And on the monthly time frame, we got above the monthly high. We made a higher low. We made a higher high. You get it. Don't want to beat a dead horse. We're bullish. Moving over to the weekly time frame, that consolidation that the NASDAQ and the S&P 500 were in since August 1st, the Dow Jones actually started that consolidation on the week of August 25th, consolidated for about 3 weeks. And now we got the manipulation here on the 2nd. And then the week of FOMC, we got the expansion started. We pulled back during the week of FOMC and then pushed higher above that expansion. So that means if we're in the expansion phase, you can expect, for all of you projectors out there, right, you can project off this range here up, right? And that'll give you the idea of where we're going. Or you can do what I do, which is just use the data, right? I don't need the projections because I already have the data in which I'm looking for it to do. All right. So looking at the daily time frame, again, nice strong wicks from these sellers, right? They're in here, but they're failing. Every time they come back to where the buyers are, the buyers buy it up and they lose, right? Ultimately, we have this daily candle, higher low, or higher low and higher high. The only thing that makes me worry here is the fact that we have this doji candle at the top of trend, which is potentially the sign of an evening star. But every time we've seen these evening stars, they never play out in this uptrend, right? They play out for a little bit and then the market just buys it right back up. So I'm going to look at this as I should, which is as long as we stay below 24 or 46,736, I'm looking to short the market. If we get above that, then it's just go time to the upper ends of the price, right? Remember though, the Dow Jones is what I like to deem the truth teller of the market. So whatever direction the Dow Jones ends up going, the market is going to eventually follow. It's like the strength of the market. It tells you the truth of the economy, right? It's not going to manipulate you as much as the S&P and NASDAQ would because it doesn't have enough stocks to do so. All right, dropping down to the 4-hour time frame. Again, you'll start to see what I mean when I say that there are some slithers of bearish tone on the Dow Jones that don't really exist on the S&P 500 and the NASDAQ. Again, we'll take off this indicator just so we can read price a little better. And we take a look at this candle, you can clearly see versus in comparison from the NASDAQ and the S&P 500, you can clearly see that this particular candle is very, very different from that of how the NASDAQ and ES closed. This now looks like a rejection candle on the 4-hour. And it looks like it could start to get some continuation. Now, whether or not it accomplishes what it needs to accomplish, I don't know, right? But I'm just going to give you that information so you have it on your charts, all right? So ultimately, all we're looking at here is the current dealing range, just like we were before. Previous day high, 46,738. Daily fib, 46,568. Previous day low, 46,398. And then things to note, weekly settlement at 46,201. And then our weekly projection up here at 47,413, which also lines up with our 3-month target that sits like right at this level and here, right? That's our range for the 3-month. We're also approaching this goal line here on the Dow Jones, which is our yearly target of 22.74%, 3 months earlier than the year ends. But that's neither here nor there. All right, let's go into where I want to see. If I want to be a bull, I'm looking for about 2.18% plus or minus, bull or bearish, back to the upside. I'm looking for the market to sweep this previous day low at 46,398 and then target 47,413 back to the upside. If we can't get that low, then I'm looking for us to hold the chessboard low at 46,569, targeting again 2.1% back to the upside, or 2.18% back to the upside at 47,526. To the downside, right? We can already see us starting to come down, but I want to see us tap back into this ADR, or at least tap into the chessboard high, right, at 46,984 and 46,829. If we get that, then we're looking for a push down about 2.16% into 45,973, or the same area on the NASDAQ and ES. This is the low that brought the high structurally. This is internal range liquidity, so you expect that to get ran. And then we need to come back down and close this gap down here if we're going to come down. And then I'd be looking for the market to go right back up, targeting these ADRs and maybe even the weekly ATR. That level is 45,973 on repeat, and then 45,815 back all the way into this 4-hour level. So those are my levels on the indices and my prediction on the indices. If that's all you came to see, I appreciate you guys for stopping by. But next, I'm going to go into the volatility index. I'm going to break down kind of my thesis on the market this week in regards to market volatility. All right. Over here is the volatility index. And again, if you're not familiar with the volatility index, feel free to join the Discord or Google the volatility index, and it'll tell you everything you need to know. In the Discord, I use it a lot, right? And I always educate the members in the Discord on what it's used for and how I use it. Right now, it's in consolidation, right? But it's consolidating in the lows at the lows after making a high here, which basically, in regards to the sequence, this was what I call the first tap. This was called the scalp, and now we're coming back down. And I'm looking for that sweep of these lows, and then a double bottom being placed before we get bullish. Now, the reason why I believe that at some point the market's going to tap into this level is because this is a weekly fair value gap. And you can see I have bad news here because I think whenever we tap into this level at 15, 16, or even sweep it, the second we come back up, it's going to be to run these highs up here. And I have the bear market starting, right? A bear market. It doesn't have to be the bear market, but we will be in a bear market once we get above 42, right? So for me, I'm looking at the VIX as consolidating down here, and you can see that this would be a setting of neutral, but it's neutral to do what, right? Are we neutral to go bearish, right? Back to the downside, or are we neutral to go bullish back to the upside? A bullish VIX is a bearish market. A bearish VIX is a bullish market, and a consolidating VIX is a very, very slow market, which is what we're in right now. Since the month of basically, I would say since July 14th. The week of July 14th is when the market slowed down, and it's slowing down for a reason. In my opinion, it's because they're filling sell side positions. It's just a matter of what will the catalyst be for the market to actually sell off. Right now, the movement is very weak to the upside. It's grinding higher, it's struggling. And yes, we are making new highs. We are making higher lows. And yes, this trend is strong, but the volume is decreasing. The volatility is decreasing. And that's a very bad sign for a market that's trying to continue to the upside. All right. So essentially what I'm looking for is to watch the VIX sweep this low. If it sweeps this low, I'm gonna get very, very bearish, right? If it continues to consolidate, I'm just gonna continue to look for longs while we consolidate inside the VIX, all right? Last but not least, let's get you over to the news on the week. We'll talk about the happenings that are going on for the week. Tomorrow on Monday, we have a no news Monday occurrence. As you guys know, no news Monday, the market usually is developing its range. I've gotten to the point where I trade gold in Tokyo on Sundays, right? Or gold in London. Basically, I try to stay away from the indices while they're trying to figure out their ranges, right? But I still will chart them. I still have a plan for them. But when I have no news, I just noticed that the resistance is very, very high. And it's just something that doesn't make me comfortable with my trading, right? So no news Monday. Then we go into Tuesday. And I believe things kick up a bit because we have flash manufacturing PMI, flash services PMI at 9:45 on a Tuesday. And then also important about Tuesday, Fed Jerome Powell is going to be speaking at 12:35 market time. So this is going to be a big deal. This should bring some volatility inside of the PM session. I don't know what he's going to say. I don't know how he's going to say it, but I know the market never likes when he's talking, right? They just never like it, right? So, because I mean, honestly, he tells the truth and people don't really like to hear the truth. They want to get living before you. Wednesday, September 24th, another no news day, but this should be the market setting up its trend, right? And getting ready to prepare to take some profit on Thursday, which will be ironically unemployment claims, which if you know anything about the market conditions right now, the only thing truly moving the market is anything that has to do with the economy in relationship to the jobs market. So unemployment claims on Thursday should be a nice turnaround day, right? And then setting us up for a nice strong finish on Friday with revised consumer sentiment and core PCE price index. Things to note about Friday, September 26th is the following week is a shortened week for the month, right? We still have 5 trading days, but it's a shortened week for the month, and the new month will be starting on Wednesday of next week. Why is that important? It's important because Friday they will most likely use to start setting the sentiment for the month of October. So really watch how they finish on Friday because it should give you an inclination of what they're planning on doing for the month of October. That being said, that is all I have for my top-down analysis. I really hope this has been informative for you guys. If so, please make sure you leave a comment down below or hit the like and subscribe button. Ladies and gentlemen, thank you so much for tapping in. My name is T Hobbs. This is The Trader Shop, and I'll catch you guys on the next one. Peace.